Hello everyone and welcome back to the channel. Today I'm diving deep into a stock that you might not know, but you absolutely should. It's a Canadian-based company that has been an absolute self-driving compounding machine for decades, delivering incredible returns to shareholders. I'm talking of course about Constellation Software. Constellation Software returns has been extraordinary in the history of the stock. In the last 5 years, Constellation Software returned 220%, which is far more than S&P 500 or S&P TSX returns. If we look in the last 10 years, Constellation Software returned 850%, which is nothing short of incredible. And again, it completely outperformed major indices like S&P 500. The price chart of Constellation Software is like a rocket ship that is always going up in the long term despite short-term volatilities. So the question is, what is the secret ingredient of this business? Constellation Software is not your typical tech company. Their business model is actually quite simple, but it is executed with extreme discipline. They are a serial acquirer. Think of them as a private equity firm that never sells its companies. They find and acquire small niche software companies that serve very specific vertical markets. These are things like software for managing a hospital, running a school, or handling municipal government services. These aren't headline-grabbing startups. They are what Constellation call mission-critical software businesses. Once a hospital or a city government has implemented one of their systems, one of these softwares, the switching costs are incredibly high. They become sticky businesses with predictable, recurring revenue from maintenance and support. This is Constellation Genius business plan. They have a decentralized management structure, meaning they buy these companies, provide a little guidance and capital, but then they let the existing management teams run their businesses. It's a hands-off, compounding strategy that has worked wonders for the business over the long term. Probably the most important ingredient of success for Constellation Software is having a great capital allocator at the helm of the company as CEO, and that's Leonard. In sharp contrast to most CEOs out there, Leonard doesn't like interviews. You cannot really find any interview from him, and while he wrote letters to shareholders in the past, which are pretty insightful and I'm going to go over one of them, he's not even doing that anymore. Anyway, I still find little gems like this in his old letters to shareholders that I want to share with you here. This part basically shows the philosophy and vision of Leonard for Constellation Software. As perpetual owners, we care about long-term health of our many small businesses. We try to provide an environment in which they can flourish. The primary way we can do that is by making sure that they have high-quality managers who are compensated according to the rational long-term oriented incentive programs. We make sure that BU managers have access to capital when they have opportunities. We try to foster a collegial environment so that best practices are shared. Late last year, when we reviewed our BU demographics, we had 243 separately managed BUs, up from 193 the prior year. We currently see no fundamental limit to number of BUs that we can manage, but we are very worried about the limits to the number of good VMS businesses that we will be able to buy at reasonable prices. To understand the where does it end question, it is useful to look at much older industries with some similarities to the VMS sector. If Constellation had started in 1895 instead of 1995, we might have had the objective of being a great perpetual owner of daily newspapers. The newspaper industry underwent a long period of high growth, which attracted many new entrants, followed by local consolidation, conglomeration, and eventual decline. I anticipate that the VMS industry will evolve similarly. Many standalone newspaper businesses and newspaper conglomerates did well for extended periods, generating far above average return on equities. They had deep moats and attracted their fair share of intelligent, ethical-driven employees. Some of these businesses returned their free cash flow to stakeholders, and some deployed it to buy other newspapers. As their industry matured, few of the newspaper conglomerates acquired somewhat related businesses: book publishing, magazine publishing, radio stations, TV stations, cable franchises, database vendors, etc. Only a tiny minority of the newspaper conglomerates made the diversification transition successfully. A couple have done extraordinarily well. If you had bought shares of Washington Post for 4 decades ago, you have more than tripled the gains generated by S&P 500 over those 40 years. One day, Constellation may find that VMS businesses are too expensive to rationally acquire. If that happens, I hope we will have had the foresight and luck to find some other high return on investment non-VMS businesses in which to invest at attractive prices. I'm already casting about for such opportunities. If we don't find attractive sectors in which to invest, then we will return our free cash flow to our investors. Even if we reinvest opportunities becomes scarcer, Constellation doesn't end. It will continue to be a good and hopefully great perpetual owner of its existing VMS portfolio, and will still deploy some capital opportunistically. You may have noticed that I deferred the why are we doing this question. The answer to that is personal to each of us who are involved in Constellation. My motivation is to help create a company where worthy people succeed. Whether they join us as an acquisition or are hired from the outside, I always want to support and encourage employees who work hard, treat others well, continuously learn, and share best practices. This was a letter to shareholders from Mark Leonard in 2018, almost 7 years ago, where he almost 6x the stock price during this time. Did you see at any point Mark Leonard tried to mislead investors and shareholders? Did he promise the moon and then delivered on nothing? I don't think so. He actually tried his best to alarm potential investors about the future of the company if things goes wrong. He talked about Constellation Software strategy clearly and mentioned what work environment he wants to create for their employees, middle-level managers, and shareholders. This is a truly visionary founder and CEO, and I like to have such a great management team at the helm of my business, instead of CEOs who promise you moon and then fail to deliver the basic growth numbers. In addition to this, they have a very interesting compensation strategy at Constellation Software. So Constellation compensation model is designed to align employee interests with shareholder value creation over the long term. A key component of this is a mandatory stock reinvestment policy for certain employees and executives. The executive compensation program typically consists of a base salary and an annual incentive bonus, and a significant portion of the annual bonus for executive employees is required to be reinvested into the company common shares. The company does not issue new shares for this purpose. They don't have a stock-based compensation, which would dilute existing shareholders. Instead, they will purchase the shares on the open market through an independent third-party agent on behalf of the employees. Employees are generally restricted from selling these shares for a specific period. I think it's close to 4 years. And this long-term holding requirement is intended to encourage employees to focus on the company's sustained success rather than short-term stock price fluctuations. This is just genius. Mark Leonard itself do not receive salary or bonus anymore, and that shows you how much the management team cares about shareholders and how much they want to go above and beyond to make sure there is no share dilution for regular shareholders. They treat their employees well, they treat their managers well, and they treat their shareholders well. This is a company that I like to invest my money in. I talked about the positives. Now let's talk about the risks. The major risk of investing in Constellation Software is its size. As the company gets bigger, it becomes harder to find small, accretive acquisitions that can move the needle. They need to do bigger deals, which can be more complex and have higher risks. Mark Leonard was able to come up with a couple of creative solutions for this issue. First solution was spawning new companies. Constellation Software created 2 new spin-off stocks in the last 5 years, Topicus and Lumine. Both of these companies followed Constellation Software business models, and both of them were extremely successful. The second solution was larger acquisitions, and this is what is reflected in recent earnings report of the company. Constellation deployed more capital in the first 6 months of this year compared to the last year. This means Constellation is now acquiring both more and larger businesses. Okay, let's look at this short clip from Mohnish Pabrai, where he was asked the same question about the size of Constellation Software and its potential runaway blockage. And this question was asked 2 years ago when Constellation market cap was half of the current one. And let's see how Mohnish Pabrai responds to this question.
You know, Constellation Software is so interesting for so many reasons, and you're sort of like with so many things, you're like, it's almost like whenever you look at an asset manager, you're like, you want a long runway, but you also want a long track record. So you're like, yeah, Constellation Software, that makes a lot of sense to have a track record, but now they're like 50 billion plus market cap, so it's probably going to be hard to do for the next 2 decades.
Well, but I would also not bet against Mark. Mark has an uncanny ability to pull rabbits out of the hat. So I don't have an investment in Constellation. And many times I think it's a mistake, even at the size and the multiple that they're at, because the quality of the manager is so exceptional and the business model is so exceptional. In many ways, Constellation is embryonic. So I would not be surprised at all if Constellation continues to do very well in the years ahead. I would also not be surprised at all if Leonard takes the company in some different direction.
I think this was a correct assessment by Mohnish Pabrai. After 2 years, Constellation Software is basically doubled in price and the stock is still growing strong. Speaking about growth, let's talk about numbers from their last earnings report, which released last Friday after the closing bell. Revenue growth. Constellation has consistently grown their revenue primarily through acquisitions. In Q2 2025, revenue grew by 15%, consists of 5% organic growth, and the rest is through successful acquisitions. Then we can look at cash flow, as cash flow is a key metric for Constellation. Cash flows from operations increased 63%, and their free cash flow available to shareholders increased 37 million to 220 million compared to 182 million for the same period in 2024. They use this cash to fund more acquisitions, creating a powerful flywheel effect. This flywheel effect is the core of their strategy. They acquire a company, that company generates cash flow, that cash flow is used to acquire more companies, which in turn generates even more cash flow. It's a self-sustaining engine of growth for the company. Okay, based on the data we see here, this is not a get-rich-quick stock. But if you're a long-term, patient investor, Constellation Software is definitely a company worth a much closer look. In the last part of the video, I just want to quickly show you the valuation of Constellation Software stock based on my personal discounted cash flow model, based on 3 different scenarios. In the bear case, I considered a little bit margin compression, and I assumed the business can grow by only 12% in the short term, 10% in the midterm, and then 8% in the long term, and a terminal multiple of 18. For the base or normal case, I considered a little bit better growth in line with the current growth of the business, and a terminal multiple of 24. And finally, in the bull case or best possible outcome, I considered business can grow by 16% in the short term, 14% in the midterm, and only 12% in the long term, and a terminal multiple of 30, which is equal to the current multiple for Constellation. So basically, I tried to be relatively cautious with my assumptions, and my expected rate of return is also 12%. Now, if I hit calculate, the software will give me some valuable information about the stock. Intrinsic value is between $3,400 Canadian and $7,258 Canadian dollar, and the fair value is $5,185 Canadian dollar for a 12% return, which compared to the current share price of 4,800 Canadian dollar, it seems the stock is trades for an 8% discount today, and it is a buy according to the model. What do you think about Constellation Software? Have you invested in Constellation? Let me know in the comment section below, and if you enjoyed the video, Please hit that like button and subscribe for more stock analysis. Thanks for watching, and I see you guys in the next video. Farewell.